The government is handing out consumption vouchers worth $10,000 to help Hongkongers weather the financial hardships caused by the fifth COVID wave. People who rent property will get a tax deduction, while some relief measures have been extended. Johanna Chen reports.
With various sectors, especially retail and tourism, hammered by the fifth COVID wave, the government plans to continue the voucher scheme, dishing out $10,000 to each adult permanent resident. The scheme will cost $66.4 billion. Around 6.3 million people will get the first tranche of $5,000 in April, with the remainder in mid-year. Sources said $400 million will be used for administration fees. They added the same four contractors: Octopus, Alipay, WeChat Pay, and Tap & Go will be used for the first installment. The public transport fare subsidy threshold will be lowered from $400 to $200 between May and October. Those who spend over $200 will get a third of their monthly expenses back, with an upper cap of $500. An estimated 3.8 million commuters will benefit. Authorities are extending the 100% personal loan guarantee scheme until the end of next April. Applicants can take out loans as much as 9 times their monthly income, up from 6 last year, with the cap raised to $100,000 from $80,000. Repayments can take up to 10 years. With the pandemic putting in-person lessons on hold, $2 billion will be allocated to the Education Fund in a 3-year program to provide needy students with computers and Wi-Fi. For the first time ever, the government plans to lessen the burden of people who rent private property. They can get a tax deduction for domestic rental expenses with a cap of $100,000. This will cost $3.3 billion. Some measures will continue for a second year, including a 100% salaries tax reduction with a ceiling of $10,000, a rates concession for domestic properties of up to $1,500 each in the first 2 quarters and $1,000 in the following 2, an electricity subsidy of $1,000, and a half-a-month allowance to those on Social Security. Johanna Chan, HKIBC.